Traders at Parthian Securities expect the equities market to remain mixed with a positive tilt as bargain hunters snap up on stock prices that have declined. Oluwaseun Dosunmu, head of research at Parthian Securities, joins me now to discuss current market volatility and what to expect in the coming days. Oluwaseun, thank you so much. It's a pleasure to have you on the show today.
Hi, Esther. Thank you. It's good to be here.
Well, we've seen the index. The index has had three bearish outings so far this week. Now, we know we'll have seen some profit taking, but just give us a sense of the overall sentiment at the market. We know that, of course, they're booking profits, but to what else would you attribute the losses to?
Yeah, so basically, we've seen that in the last couple of days, the market has been correcting itself, and it has been going lower close to the most recent support levels that we have seen since the start of the month. This is not surprising because we know that the market rallied after 15 years of consolidation. So right now, what we see happening is the fact that the market is actually looking for positive triggers or a catalyst that would actually stimulate activities that would enable it break that 66,000 psychological line. One of the things that we're also looking at is the fact that the tier one banks have not released their financials, and I think that will be a major determinant of what is going to happen in the coming weeks. Another thing we need to look out for has to do with the dividend declaration by the banks, because investors are actually eyeing that to actually see whether or not the banks will pay higher dividends. And if we see that the tier one banks are declaring higher interim dividends, then that should actually spur more buying activities in the markets.
Apart from okay, that was
yes.
going to lead me to my next questions. What stocks are investors keen on having in their portfolio at this time, and what is your short to medium-term outlook for these stocks?
So now, basically, we know that due to the FX volatility and the policies that have been in play, the banks stand to benefit much more than that's the banking sector now stands to benefit much more than every other sector. However, we're also looking at the performance of crude oil prices in international markets. We know that crude oil prices have been on the upturn in the last couple of days, or let me say weeks now, and that is positive for the players in that space. So we believe that those are two sectors that some investors might be looking at. We know that the consumer goods sector has come under a lot of pressure lately. So and one of the challenge there is the fact that when the producers try to pass on the cost to the consumers, most of their products are not inelastic. So you have competing commodities. I think that going forward, the banking sector and the oil and gas sector might actually weather the storm that we're currently facing in the market.
Well, you're absolutely right about, the pressure. I was going to, my next question was going to be on, of course, recent or latest macro data and the impact on the markets. Investors are certainly investing in uncertain macro conditions. And both, if you look at both the monetary authorities and fiscal authorities, or fiscal space and monetary space still looks bleak at this time and may persist in the short term. But how are investors weighing that against what they have in their portfolio? Would they be leaning more to perhaps outside of the banks, leaning more to, if there is at this time in the market, safe haven stocks where they can hedge going forward as they continue to monitor happenings within the economy?
Yes, you said it already. The environment is a bit challenging, and we've seen that with the recent inflation that inflation is above 24%. We know that as of today, there was a mild pullback in the exchange rates, lower than 890. But before that, we also have to look at the supply of FX in the market, and we know that a lot of businesses actually source their dollars from the parallel market. So yes, there's a lot of pressure in the markets. There's a lot of pressure on investors' wallets and also on consumers' wallet, because we know that their propensity to save will be a bit lower. And now people will tend to look for more Aggressive returns, yes, aggressive returns will be on the minds of a lot of people. We know that at the last auction, for T-bills auction, now yield settled at about 9% from the 12% that it was at, a little above 12% that it was at the previous auction. So these are some of the concerns that, will be on the minds of people. As per the stocks that, people will be focusing on, I mean, like I mentioned, I think the banking sector still, has some form of upside for investors. Also, like I mentioned, for some of the companies now playing in the oil and gas sector because of the recent increase in crude oil prices, I think investors will actually look at those spaces. Another thing that we need to focus on has to do with, the performance of companies, especially for their half-year earnings. Now, one of the things that we've been looking at has to do with, the revenue, the top line and the bottom line numbers, comparing them to the full year 2022 numbers. So we did this simple analysis whereby we had to just look at their current performance right now, comparing it to what they did for full year 2022. For those companies who have done above 75%, we're actually looking at those companies because for us, it tells us that, they've been able to do way better than what they did last year. And there's a likelihood that they would most likely do better than, what we anticipate. They will do better, sorry, they'll do better this year. And it also means that there's a chance for them to also pay higher dividends. So
But
that's what we're looking
that's
at
quite
right now.
interesting, given the current. I mean, in the context of the current state of the economy. But talk to us. We have just about a minute left. The stocks that you like, you just mentioned, you just talked about them, but perhaps highlight one or two that you like that are on your radar.
No, basically for me, I'm looking at the tier one banks. I can't specifically say which ones, but generally I know that especially those that have FX exposure, I think that they will do quite well during this time.
Okay.
We're optimistic about those ones.
All right, Oluwaseun, thank you for talking to us today. Appreciate your time on the show. Oluwaseun Dosunmu, Head of Research at Parthian Securities, taking us through the stock market here in Lagos.